now that Wall Street's going all in on the prospect of a rapid V-shaped recovery, what does that mean for beating down tech hardware names? I'm talking about like HP, the PC and printing division of the old Hewlett-Packard. We spent a lot of time talking about tech winners from the stay-at-home economy, but it's tough to imagine HP thriving in an environment where working in an office has gone out of style. Sure enough, when HP reported after the close today, the company posted a sizable revenue miss, down 11% year over year. But they still managed to put up a solid 7-cent earnings beat off a 44-cent basis. But somewhat worrisome, their cash flow numbers came in well below expectations. Management's guidance for the next quarter, I'm calling it light. Still, I think we need a clear picture. So let's drill down with Enrique Lores. He's the president and CEO of HP Inc. to get a better read on the quarter and what he sees going forward. Mr. Lores, welcome back to Mad Money.
Hi, Jim. How are you?
Oh, I'm good, Enrique. Good to see you. Now, I want to thank you. I want to try to understand this quarter because this one was a little hard for me.
Okay.
The earnings beat, sensational. But some of the lines, including, say, free cash flow and how you're doing in printers, seemed suboptimal to me, given the fact that with this work at home, I would have thought that everyone had to recreate their office work. So maybe you can walk me through the quarter and what I'm missing.
Sure. So first of all, as you said, I am extremely proud about the results that we posted. We beat earnings by 6 cents, which is, we believe, a very solid result. And I'm especially proud of how the whole company responded to the situation. And by the fact that, as you were saying, we have now an opportunity of making this brand even more essential than before. If I talk about the specific results, we saw very strong results and very strong demand on PCs, but we also saw a disruption on supply chain that impacted both PCs and also print. As we talked in our earnings in February, factories in China opened a few weeks later after Chinese New Year, and this has had an impact both in printers and in PCs. So we saw strong demand for home printers, but we couldn't ship because we had these supply chain issues.
Oh, okay. So, but I know your inventory went up substantially. So for this quarter, are you now set in better shape than you were when you were kind of caught both by China and COVID?
Actually, the team has done a fantastic job getting the factories back to work. And at the beginning of May, we were almost at full capacity. And I say almost because given the current environment, there could be always surprises from us or from some of our suppliers. But we have really addressed the supply chain problems that we had. And we are now, Q3, we will be addressing them in Q3. Okay,
now you, on our show, introduced the concept that I like of the subscription business for Inc. Now, you said that was strong in your release. Is there a way to quantify that so I know whether that is going to be something to look forward to, since Inc., what used to be in the old days, a really good part of the business?
So this actually was one of the key positive trends that we saw in this situation. We saw a very significant increase of demand for subscriptions. If you remember when we were talking in February, I was sharing that we had 6 million subscribers.
Yes.
We surpassed 7 million subscribers late in April, so which is 1 million additionally in less than a quarter. And even more important, we have seen 30% growth year on year on subscribers. And as you know, this is very important for us because this is how we want to drive the business going forward. So it's a significant support for the strategy that we have put in place.
Okay, now, in your strategic and financial plan for value creation, in response to the Xerox bid, we did talk about doing a lot more buybacks. But I guess because of COVID, you've got to be more conservative on that in terms of how much stock you'll buy back?
So, first of all, we still think that buying back stores is good because we think it's undervalued. What we have shared today is that we are going to stay committed to the principles that we shared in the value plan. We think we have an opportunity of raising debt. We also will be giving back to shareholders 100% of free cash flow. And as the situation will get more stable, we will become more aggressive in buying shares back and returning capital to shareholders.
Okay, good. Now, the strength in notebooks was notable. Is that with the Dragonfly? Is that just the concept that you have that is a lighter, faster notebook that I know is quicker than anybody else's?
Actually, the demand for notebooks has been driven across the full portfolio. Dragonfly has been helping because it's a fantastic product, but we have innovation from Chromebooks to Elite books to the top of the gamma of the PCs. And we have seen very strong demand across the board. We have also seen very strong demand on education. Our kids are learning from home, and this gives us even more confidence about the personal systems business for the future than what we had last time we talked in February.
Okay, one of the great debates that we have right now on Wall Street is whether people are going to continue to stay at home and work at home. Now, a lot of their new work offices are HP. Is it your view that after all the money that's been sunk into doing that we're not just going to give up those home offices and that a lot of people are going to stay home going forward?
We think that for some particular jobs, people will continue working from home, and this will be happening in many different industries. And actually, we see this as an opportunity. It's clearly an opportunity for personal systems, PCs, accessories, but it's also an opportunity for print because we have a strong position in office printing and in home printing, and we have the ability of connecting both for our customers.
Okay, now 3D printing is something, I've been, ever since it was rolled out by DIA 2016, I've been fascinated by it. It looks like you had the 3D printers going overtime for PPE, and I think you should talk about that because it's a great thing you did. You're probably from what I can tell, the biggest donator.
We actually probably are, and we are extremely proud of what we did with 3D printing this quarter. It was a key milestone for the category. We proved the flexibility that this technology has, how important it is to be able to produce locally. And so, we produce more than 2 million parts. And when I say parts, I don't make justice to it. We produce face shields, respirators, ventilators that went to hospitals to help doctors work in this very difficult situation.
All right, and then last question. From your experience, if your stock stays here, do you think you're going to have to hear from Xerox again, or do you think they realize it's just not the right time and not necessarily the right bet, so to speak?
I think, Jim, it doesn't make sense for me to speculate on what others will do. Let me tell you what we are doing. We are very focused in executing our strategy, and we are now more confident than ever on our ability to create value for shareholders. We think this brand is an essential brand for people. We have demonstrated it this quarter, and this will help us to continue to create value in the future.
All right, great, Enrique. I'm glad you're safe and sound. Thank you so much for coming on Mad Money. Great to see you, sir.
Thank you.
Okay, that's Enrique Lores, the president and CEO of HP Inc. Mad Money's back into the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.